Hello and good afternoon. Thank you for joining today's election commentary webinar. Before Mike shares his thoughts, we would like to share our compliance department's thoughts, which are as follows. Weiss does not recommend particular stocks, bonds, options, derivatives, or securities of any kind. We do not guarantee any results or investment returns based on the information you receive. Although we have used our best efforts to provide the most innovative trading and investment strategies, the views presented today are forward-looking statements which are subject to change as circumstances change, and we cannot promise future profitability. If you have any follow-up questions after listening to the webinar, please feel free to reach out to Mike and/or the marketing team. Weiss would love to hear from you. A replay of this webinar will also be available on the Weiss website and the YouTube channel later today. And with that, Mike, the floor is yours.
Hi, everyone. I want to take a little time this afternoon to walk you through our views on a framework going into the election for both what's predictable and priced in going into the election, and also what we think is both very much subject to the outcome, as well as where we'll see continuity in our framework. To give you sort of the answer before getting into the substance, we think that despite all of the confusion and hand waving to the contrary, that the election outcome may be more predictable here than people think. However, we also think that the phenomena coming out, despite what is or is not priced in right now, is going to lead to a lot more dispersion. And we are really looking at that through an inflationary or a reflationary lens, and are very focused on what impact that may have. So please keep those conclusions in mind as we run through. I want to start with thinking about what's actually priced in at the moment. At least in prediction markets, it's been a pretty tight range, with Biden at sort of, call it 55 to 60% probable, and importantly, the Democratic control of the Senate, so a blue wave, if you will, at declining and sort of sitting at a, call it high 40% probability. We think without, and I'm not going to spend a lot of time agreeing or disagreeing with polls, but as far as patterns go, we think one of the mispricings is that there should not be as much of a discrepancy between the assessed probabilities of Biden winning as Republicans keeping the Senate. In other words, it is most likely that if Biden wins, that it is in fact a blue wave. And let's just spend a second on some of the state polls that demonstrate that. There are really, basically 12 states that matter: Arizona, Colorado, Florida, Georgia, Iowa, Maine, Michigan, Minnesota, Nevada, North Carolina, Pennsylvania, and Wisconsin. Of those, Biden is leading in all but Georgia and Iowa. I would say, that's as likely to hold as not. They're sort of within the margin of error. And of course, if you can read this elsewhere, you don't need my insight for it, but it really, Trump has to hold, let's call it 7 of the 9 that we're talking about in order to win the election. So the Electoral College skews asymmetrically to Biden at this point in where polls are. What's more interesting, though, in terms of the Senate landscape, is that many of these states also have an at-risk Republican senator. So assuming that, which I think is a safe assumption, assuming that Alabama flips, if 4 of these go, then we have Democrat control of the Senate. And that looks very likely in terms of Arizona and Colorado, pretty likely in terms of Maine, and then it's really going to be North Carolina that is a tipping point state for the Senate. What we would point out is that, especially in this pretty polarized environment, there's a very, very high correlation between votes for president and vote for Senate. Or said differently, there aren't very many split tickets. You're voting Republican all the way down the ballot or Democrat all the way down the ballot. That is very consistent with how Senate polls in North Carolina look, and also in Arizona and Colorado and Maine. There's some possibility in the 2 races where you could see split tickets that actually flips towards the Democrats, with Joni Ernst in Iowa underpolling Trump, and also not really contested at the presidential level, but in Montana with Steve Daines also underpolling Trump. Montana is a special case because Steve Bullock is the governor of the state. He won the governorship in 2016, despite that Trump won the vote there. So Montana is eligible, albeit not particularly likely, as a split vote towards the Democrats. Long way of saying that where we would disagree with consensus right now is that we see a wave election as being almost as likely as Biden winning. So that's very important as we think about sweeping changes to tax policy, fiscal policy, infrastructure, regulatory, et cetera. And so we do see pretty significant dispersion as the most probable outcome. As far as how we're seeing that show up in the markets, it's important to point out that the traded baskets that many market makers are providing clients are not showing any evidence of this polling being definitive. I'm showing you here the Goldman and Citigroup effectively long a Democratic win, short a Republican win basket. You can see that these respective baskets are hugging each other very tightly. So not a lot of information to be gleaned there. Moreover, it's getting more and more expensive just looking at December versus November vol spreads. It's getting more and more expensive to hedge out the election. So there is some risk, especially if and as polls solidify where they are, that we do see some degrossing in markets, and that that cost of hedging and therefore vol overall, even in advance of the election, starts to appreciate. But a lot of the reason for that may very well be uncertainty around the election, not the election outcome, but the election structure itself. So we do want to spend a minute on whether or not the outcome itself is predictable in the first case, and then in a moment when and under what circumstances we'll know the outcome. There's a lot of discussion about, Biden's ahead by, call it 7-8 points, but so was Hillary Clinton in 2016, and that proved wrong. So we don't know. Or said differently, the error bars are very wide, therefore, vol should be expensive. There are a couple of reasons why we disagree with that conventional wisdom. The biggest is that the picture around undecideds is very different in 2020 versus 2016. Or said differently, both of these candidates are very well known, and people have sort of already made their decisions as to where they're going to go. In 2016, undecideds broke for Trump 2-1. That was more or less the story of the election, and in some narratives why polls 2 weeks out didn't capture the outcome. Today, as you'll see in the bottom chart here, there's only 6% undecided versus 16% at the same point in 2016. So it's really not anywhere near as much of a factor. Moreover, there is not a third-party spoiler problem. Remember Gary Johnson? Remember Jill Stein? There's no similar figure in this election. And in the 3 swing states plus Florida that were so hyped in 2016, you can see that votes for a third-party candidate in that other category circled in blue were significantly larger by many multiples in most instances than the actual difference between Republican and Democrat votes. And so that swing factor is no longer there. I certainly would be dismissive of Kanye as a serious candidate in any event, but regardless of that subjective judgment, he's only on the ballot in one of the aforementioned 9 important states. I think another point is even where you are seeing either more undecideds or less enthusiasm. There's a lot of talk about this being a referendum on candidate enthusiasm, where that enthusiasm is negative, i.e., where respondents in polls have a strong dislike for both candidates. There's considerable skew towards Biden. It's roughly 6-1 of those who dislike both candidates, but will still vote, will vote for Biden rather than Trump. And that just demonstrates that in those cohorts, the existing poll spread is probably going to get reinforced. Last point, just on the sort of broader narrative about going back to 2016, about there being, in Steve Bannon's terminology, a silent majority or shy Trump voters that aren't counted. One of the liabilities of being an incumbent is you're very well known. everybody has an impression of Trump, lovers and haters, and the idea of Trump shyness, I think, is pretty passé. And Bannon's aforementioned silent majority is in most cases neither silent nor an actual majority when it comes to the popular vote. So long way of saying that we do think that polls are likely to be much more sticky, and therefore going into the election, if we do see Biden's lead in these respective states continue to solidify or even expand, then it makes the outcome that much more predictable. That brings up the question of when are we going to know the outcome? And it's been it's been very popular to talk about election night chaos, and we may not know for weeks, and mail-in balloting increasing uncertainties and that sort of thing. That's actually a very relevant consideration, that the uncertainty created by what may be in many states 30 to 40% voting absentee is market. If you wanted to take the most extreme example, in 2018 in California, in the midterms, where again, California is a pretty established state in terms of mail-in voting, roughly 2% of ballots were thrown out as being improper. And in places where margins of victory can be, well inside of 2% or well inside of 1% if you adjust for the percentages voting remotely or voting by mail, that can be very meaningful. So this absolutely, if various races tighten, and many of them will be very tight, this is worth watching. However, it's probably not correct to say that we're not going to know outcomes in a more decisive election for quite some time, in particular because the tipping point states, which may well be Florida in the presidential and North Carolina in the Senate, have very strong processes for counting ballots well ahead of election night. You can see on the chart here, Florida is able to start counting votes and processing ballots 21 days before the election, and North Carolina can start processing 5 weeks and start counting 2 weeks before the election. So it's entirely possible that the vast majority of those absentee ballots are counted, before we even start tuning into broadcasts on election night, and they can have pretty definitive results. And if Biden wins Florida by some decent margin, and Tillis wins North Carolina, that will tell pretty clearly what the outcomes for the presidential and the Senate look like. Those are very big ifs, but that's a very real scenario in which we'll know that outcome. And last, it's a minor point, but that does help explain a little bit as to why Bloomberg is investing $100 million in Florida, not just to help Biden win, but to help solidify a decisive call on the election, if that is in fact possible. Florida is the clearest path to being determinative in that way, because Trump has no path to winning the Electoral College if he doesn't win Florida. So zooming out for a minute, in concluding the sort of election predictions, we can say that this could be more orderly than a lot of folks have in their mind's eye right now, and we want to be prepared for that. As far as the broader questions and the broader policy questions that are going to result, we're at an incredibly strange inflection point as far as the amount of suffering and economic downturn here captured in GDP year to date. You could see the same in unemployment figures, obviously cresting in the low teens and coming at still a very high 8 to 9%. We see that amount of obvious economic destruction, but on the other hand, there's a lot of good things to be said about where the economy is. Disposable personal income is up decisively in 2020, as are personal savings. These obviously accruing to those who have substantial assets, so wealthier Americans. And the reason for this is very well known, because the Fed somewhere between delivered and over-delivered on monetary policy. This is true in US M2, it's true in M2 around the globe. And the result of that, of turning on the liquidity faucet, has been obvious strength in asset markets, in particular the sort of COVID beneficiary NASDAQ stocks, but also we've seen the early stages of inflation in commodities, and we've seen bottlenecks in supply chains and in goods that became in demand because of pandemic phenomena. And a lot of that, as far as those who've done just fine, accrues to, again, the wealthier cohort of Americans. But that is not that does not define a policy equilibrium. So one of the obvious problems is that for those who've had a very hard time during the pandemic and over the last year, there is an increasing demand, an increasing consensus to meet the demand for both more stimulus and more relief. And where that puts us is determining what the handoff from monetary to fiscal policy looks like well beyond the CARES Act, on the understanding that there's a very clear consensus that we will be spending more, we will be doing more, and deficit spending is simply the state of affairs. But this will look very, despite that obvious plank in our fiscal predisposition, it's going to look very different under a Biden versus Trump 2 administration. I do want to spend a second on where that new reality, as far as especially redistributive thinking, sits. If you go back to just a year ago in September 2019, Andrew Yang, as a Democratic candidate, was, although he did have some traction, was kind of snickered at a little bit in talking about universal basic income and distributing $1,000 a month to all Americans. Fast forward to April 2020, and it's not just $1,000; it's $1,200 a month per American, or at least heads of household. And these are real checks being sent out, obviously for a reason. But we also have the unemployment insurance with the plus ups at $600 that are exceeding many folks' prior to pandemic earnings levels. So a very real consensus to push that sort of relief, but to get those pipes working, as it were, in terms of some of that redistributive thinking. And then even as we emerge from that, there's a split with some previously conservative or considered conservative Republicans like Rob Portman pushing for back to work bonuses, whereas a now vice presidential nominee, Harris, and Sanders and Markey pushing for an additional payment of $2,000 per American. Take that forward to today, and we're even talking about in New Jersey about baby bond, $1,000 baby bonds for every new baby born in New Jersey to families earning below certain income thresholds. So all of this is creating a very, very much a new reality in terms of facing economic inequality in these post-pandemic times, or current pandemic, and then hopefully to come post-pandemic times. How is this going to get paid for? I think irrespective, and we're not going to go through Biden tax policy in any detail right now, but without having to do that, we can say that taxes are going up in any scenario. Part of the reason for that is even if Trump is reelected, it's almost certain that Democrats will keep the House, and House leadership is already focused on a debt ceiling that comes up in mid-2021 that they will not budge on without scaling back some of the 2017 Trump tax cuts. So, that's sort of your, from a tax lens, best case scenario. Under the Biden plan, with or without taking the Senate, there are several of these measures that are highlighted on the screen here. Potentially foreign earnings minima, potentially offshoring penalties, potentially the carried interest that can happen by executive order. We would expect, without the Senate, a Biden to be pretty aggressive by executive order. But the other thing I would point out that'll be most impactful in our view on markets and individual securities is going to be a corporate minimum tax, or that 15% flat tax on book income. That can be a very big deal, and I would look to that to be the biggest change in terms of the pay-fors. The other big change that we expect to be pro-dispersion in a Biden presidency would be some progressive regulatory impetus. We do think that a President Biden, should he be elected, is going to have a fairly moderate economic staff, the Mike Donilons and Ron Klains and Jared Bernsteins of the world. But in order to maintain the goodwill of the progressive caucus, especially in the House, there are going to have to be a number of appointees that will go to progressives in some of those seats. I would certainly look to Treasury as being the most impactful, but even under Treasury, the CFPB, potentially AG or the Deputy AG for Antitrust, the Education Department, the Labor Department, as all being potential destinations for progressive appointees that could all be quite impactful. And there's no doubt that personnel will be policy in a Biden administration. So look for those appointments to potentially move markets between, effectively, if Biden wins in November, between then and inauguration. I think think that's going to be very important to watch. In any scenario, what we're going to see in terms of fiscal policy is going to be a lot more building and a push towards, both through infrastructure and through incentives for re-onshoring and the like, a Build America plan. It's going to look very different between a Biden and a Trump. Build the wall under Trump, build back better being Biden's slogan. But I would, in terms of thinking about the contours of that and the impetus that the pandemic has created for it, I'd commend Mark Andreessen's piece written back in April. You can find it on his website. That it's time to build. And the notion that this is going to be a big part of pushing employment, pushing re-onshoring, which is certainly agreed upon by both Biden and Trump, and pushing infrastructure spending. We also think that the mentality around that is going to emphasize, or at least the supply chain mentality is going to emphasize resiliency over efficiency, and that we're going to see a lot of spending on that front. If Biden is elected, we think that the first 100 days will feature an FDR-like infrastructure package that we think could be even bigger than the $3 trillion that's being advertised now. That's going to change a lot of leadership in terms of security's performance between where we are today and where we think we can be. And all of these efforts, the redistributive efforts, the potential progressive regulation, and then of course this infrastructure push will all be continue to fuel inflationary and reflationary impulses. And we think that's a very important backdrop that's going to get solidified in the election. So with that, I want to commit that we'll have another webinar to talk in more detail about some of those policies even before the election. But we wanted to set that framework now. And for anyone who has any follow-up or questions or wants to dive into any of these points, medwards@gweiss.com. I'd be happy to respond to you there. Thanks.
That concludes today's webinar. Thank you for watching, and we hope to hear from you soon.